Check. Yeah. Region Weekly, deep inundation. Break it down simple, demystify the system. Demystify deep in, tapping, tuning. Noise online, yeah, the whole net moving. Bills get passed, yeah, we track that movement. Region space drop, alpha, prove it. Macro talk, but we still stay winning. Better go up when the crowd start listening. From the chain to the world we bridging. Deep in the connection, yeah, we building. Yeah. We don't chase hype, we decode systems. Congress floor, yeah, we read legislation. Bills get signed, market shift quick. Policy change, we already on it. CPIs, rate cuts pending. Fed chair talk, got the charts all bending. Infrastructure plays, long-term vision. Deep in those, get real permission. Fiber lines run through the...
Woo! What's up, everybody? It is. My audio coming through? It is coming through. How's everybody doing today? It is Tuesday, February 10th. Guys, this is like episode 119, I think. Something crazy like that. Oh, buddy. You might have seen some reports today. This video circulating that like Trump says he's made the wrong choice with Warsh, and everyone's like, he's out. Yeah, let's talk about that. We also have Rubio sounding the alarm on the US dollar. We'll see. We'll see about that too. Let's see what else we got. We're going to talk about the plan that Warsh and Besant have. By the way, they shared the same boss. That's Stanley Druckenmiller. Druckenmiller? Yeah, Druckenmiller. So they're very close. I think that had a lot to do with Trump's decision to appoint. He hasn't done it yet. He hasn't appointed Warsh yet, but I think it's coming. We're also going to talk about some of the plays, maybe in crypto. I had a nice short yesterday. I'll walk you through that. And we'll talk about what's going on in Deep End. Some of the stuff that's happening across the Deep End space. 375 AI, what's happening with their token price? It's been like bipolar, like up and down, up and down. I think we can kind of look through what's taking place there as well. So hopefully everyone's having a fantastic day. Make sure to like and share. And if you're on YouTube, like as well. And subscribe on both if you haven't already. Okay, this is the clip, guys, that is circulating all over the place. You guys have probably seen it at this point. And there's some big accounts that took this and ran with it. It says, great news. Trump is openly admitting to nominating Warsh. That nominating Warsh was a big mistake. Okay, so let's go ahead and play this clip.
When did you, in your heart and mind, when did you know you wanted Kevin Warsh?
So
officially, it was 2 Fridays ago. But when did you?
Well, I made a mistake. He was runner-up, if you want to say that.
He was a finalist.
Yeah, he was, and I made a mistake because I had somebody that was my Secretary of the Treasury wanted him so badly, and I didn't feel good about him. But sometimes you listen to people, and it was a mistake. It was really a big mistake. But I think we're going to do something that's really spectacular.
Okay. So people are taking this and running with it. Him saying it's a mistake. It was a mistake. The Treasury Secretary wanted that pick. Guys, he was talking about his first term in this video. Kevin Warsh was a runner-up. Trump ended up going with Powell based on the Treasury Secretary at the time. That he wanted him to choose Powell. So when he's saying that was a mistake, he's not talking about Warsh. And I've seen some huge accounts run with this, take it out of context, and like, it's crazy, man. So you really have to fact check everything. Granted, a couple of them, let me adjust this. There we go. A couple of them did come out and apologize and deleted the post. So I appreciate that. But man, like, people got to be better about this stuff. Like, that's crazy. So if you look here, it still looks like, Warsh at 96%, up 1%. I think he's going to end up getting nominated at this point. Like, he hasn't backed off of it. I don't know why he hasn't done it yet, but all these people are voting on Judy Shelton. I think that Judy Shelton will likely become I think she already is. She already is a Fed member, isn't she? Or no, she's not. I don't think Judy Shelton is a Fed member yet. I think she's going to be a Fed member. So she'll be a voting member. But she's not. I don't think that she's going to be the Fed chair, guys. I really don't. She was nominated to the Federal Reserve Board of Governors in 2019. Oh, it was withdrawn in 2021. Okay. Yeah, so she's not right now, but I think she is going to be added. I bet there are some betting odds on that, actually. We might be able to find that. Let's see. Who would be nominated as Fed governor? Let's see. Yeah, there you go. Judy Shelton's in there. 17%. So there you go. All right, let's move on from that. There are some job numbers coming out tomorrow, and I think they're going to be pretty bad. Peter Navarro, we haven't heard from him in a while. He was on Fox talking about the job numbers, and it sounds a little bit like he's sounding the alarm, frankly, but I'm going to play this clip for you guys.
One thing I want to note, the jobs report's going to come out tomorrow.
Yeah.
We have to revise our expectations down significantly for what a monthly job number should look like. When we were letting in 2 million illegal aliens, they're coming in. We had to produce 200,000 jobs a month for steady state. And by the way, all of the jobs that we were creating in Biden years were going to illegals. Americans were going to the unemployment lines. That's totally reversed. And now 50,000 a month is going to be more like what we need. So Wall Street, when this stuff comes out, they can't rain on that parade. They have to adjust for the fact that we're deporting millions of illegals.
That's a good
out
point.
Of our job market.
But it sounds like you're expecting a weak number tomorrow.
No, not expecting a weak number. I'm just saying that going forward, when we see a number under 100,000, we don't wring our hands. We say, yeah, that's going to be steady state.
Peter, great to see you.
It's all good, Maria.
I like how she calls him out on that. Look, there is some credence to that. Okay. Certainly that, with the and Jerome Powell's even talked about this, right? With the deportations, there are less jobs added, I guess, or less job openings because you have people that are leaving, you have people taking those jobs. Certainly him saying, not a single American got a job and it was all, that's like ridiculous hyperbole. But there's something to be said about, there are vacancies opening with deportations. Okay. That is true. Now, how do the job numbers read? I can tell you, me personally, like I know people that have been getting laid off. You're seeing a lot of layoff announcements. I think the job numbers are going to be bad. Okay. And the question is then how do you play that in the market? And there's not really a clear-cut answer. And the reason why, conventional wisdom you'd think markets would crash. That's not what we've seen in recent months when the job numbers have come in poorly. And it's because that means that people are expecting more rate cuts. Okay. And we've seen this a handful of times now where job numbers come in poor and the markets actually rally. I know it doesn't make any sense, but I think it's just based on the assumption that if job numbers are bad, that means the Fed has to cut rates more this year. And that's good for risk on assets. And it is true. I mean, on one end, really the top 10% own most of the stock market. Okay. So I guess they could say like, well, just because, the job market sucks, if they're cutting rates, that's good for investments. Yeah. But at a certain point, if too many people are out of work and they can't spend money on the economy, well, it hurts these companies, the bottom line of these companies. So it is going to impact the stock market at a certain point. So all that to say, we don't really know how the market's going to react tomorrow. We'll have to see when the job numbers hit how it reacts. I personally wouldn't want to be in any leverage positions at that point because I think it could go either way. But I do definitely expect the job numbers to be very poor. And we'll have to see what the context is around the numbers that come in. The other thing we're seeing some FUD around here, China has instructed their banks to begin selling and limit purchase of U.S. government bonds amid concerns the U.S. may expose banks to sharp swings. Okay. This has been, I don't know, people are pushing this all over the place, right? And it is true. China has been selling off their holdings. They've been buying gold. They are absolutely posturing for a new global reserve currency. Okay. And whether that's the yuan, which I don't think that's the play. I think the play is a BRICS currency, but we'll see. Regardless, we know the play they're making. This is something I put a video out on like 15 months ago, okay, talking about exactly this. But it may not be as bad as what people are saying here, okay? For example, okay, let's look at China. China is now our third largest treasury holder. They still have just under $683 billion. If you go back a year, they 1 year ago, this is updated as of November, so it gets updated every like handful of months. But they went from 768 down to 682, so they did drop significantly, but they still hold a lot. But if you look at the overall foreign holdings, the grand total here, okay, so we go over here, $9.355 trillion in foreign holdings of our debt. Okay, you stay on that line there, and 8.723 trillion. So overall, even taking into consideration the drop in China's holdings of our treasuries, the net increase has been about $600 billion in foreign buyers of our debt over the last year. So all of this like craziness around China's dumping our bonds, everyone's dumping our bonds, is not true. It's just not true. Now, not to say that can't happen at some point, but I think that the play with Warsh is in part going to try to fix this issue. Frankly. And here's the clip, by the way, of, I don't actually know. I'm not going to play this because I don't know if this is true. I'm gonna research to make sure this is actually a real clip. But it's basically Rubio saying that other countries are starting to trade outside of the U.S. dollar, and that we won't be able to put sanctions on them. But I do want to make sure that's an accurate clip before I play it for you guys. Now, there is a new report that came out talking about the Warsh plan. So y'all remember it was about 2 weeks ago, a week and a half ago now, that Trump came out on social media and said he's going to nominate Warsh, and the market sold off. Everyone, said he's going to be a super hawk. This is something I covered for months before that. That we didn't want Warsh in there, and it would basically crush our bags, which is exactly what's happened so far. But this report came out about the Fed Treasury Accord and this $30 trillion bond market. And I'm gonna sift through what it means. It's basically what I've been talking about. I mean, there's a space like 2 weeks ago. I don't know if it was my Deep and Connected space or the DABA space. I remember I was driving back from St. Louis to Chicago, and I basically went through this exact plan that they just posted 2 days ago by kind of connecting the dots. Okay, so let's go into the details here. This is a new accord, and basically the Treasury Secretary, Scott Bessent, oversees the Treasury, right? The money printing. You have then the Fed that controls their balance sheet and controls rates. Basically, what they're looking to do is work in conjunction and harmony with each other. And I think that this is a big reason why Trump chose Warsh, is because him and Bessent have a very close relationship. They both worked under the same boss. They know each other very well. And I think that Bessent is going to have a fair amount of control over the decisions that Warsh makes. So basically it says this new accord could simply spell out that outside of day-to-day liquidity management, the Fed would only make large-scale Treasury purchases with the Treasury's endorsement. In other words, they wouldn't make any big Treasury purchases, in increasing their balance sheet unless Scott Bessent over at the Treasury gave him the nod. Okay. It says with an eye of halting QE as soon as market conditions allowed. So, right now they are buying up Treasury bills. The Fed balance sheet is increasing. It sounds like they would continue doing that. Scott Bessent would have to give the green light for them to keep doing that, and then they would decide when to discontinue that when the markets could handle it. Says by inserting the Treasury into Fed decisions in such a way could prompt other interpretations. Says here, this Krishna Gua, I guess that's how you say your name, Investors will read this as implying that Bessent will have a soft veto on any quantitative tightening plans. So, everyone's worried about Warsh coming in here and starting up QT. Bessent could effectively veto him, is what they're saying, and that is why I think Trump is trusting Bessent. He should. He trusts Bessent. Bessent's been a freaking beast, man. He's been really, honestly, I think he's the thing that's kept the wheels on for Trump's administration this last year. And they did some crazy things, but he's kind of been out there smoothing things over every step of the way. And Bessent came out and said this, and I think this is very telling. So I wouldn't expect them to do anything quickly as far as reducing the balance sheet. They've moved to the ample regime policy, and that does require a larger balance sheet. So I would think that they'll probably sit back, take at least a year to decide what they want to do. This is a big deal because I think the markets overreacted to Warsh, expecting that he was going to start decreasing the balance sheet as soon as he got in as the Fed chair. It sounds to me here, and I think Bessent's going to have a big say in what they do, that when Warsh takes over on May 15th, it could be a full year. Okay. You're talking May of 2027 before they actually start to reduce the balance sheet. I would imagine they would do so with plenty of forewarning as well. Okay. So I think this is a really big deal. The other version of this, it says a meatier version of an accord would lay out what many market participants expect: a rollover of Fed Treasury holdings from mid and longer term securities to bills, which mature in 12 months or less. I've talked about this a lot. Okay. So we have, when we have our debt, we have a mixture of longer term debt, 30-year, 20-year, 10-year, and we have our shorter term debt, 2 years, a year, 6 months, 3 months. I just want to lay this out for you so you can kind of see why this matters. The shorter term debt here, you'll notice the yield is much lower. Okay, 3.67%, 3.59%, 3.39%. As you get out to the 30-year, it's much higher, 4.78%. I know 1% doesn't sound like a big number, but it is when you're financing trillions of dollars in debt. The Fed has a lot of control over the short term. So when the Fed reduces rates, these shorter term rates drop in conjunction, and they're very closely tied to whatever the Fed does. These rates out here are far less impacted by what the Fed does. It's more based on demand. As we issue these bonds, our people are going to step in and buy. If they don't buy, then we essentially have to raise this yield, offer them a higher percentage on their money to entice them to buy these long-term debt vehicles. So the big issue here is this number right here, the interest on the debt. So we're paying nearly $1 trillion a year on our debt. Just to put that into perspective, we bring in roughly $5 trillion a year in tax revenue. We spend $7 trillion. So it's a $2 trillion a year deficit. That'd be like, if you think about, you on your credit card, that'd be like you adding $7,000 a year and paying off $5,000 a year. So you're running negative 2,000. Okay. But we're talking about trillions of dollars here. So that's $2 trillion that we're running negative every year. Half of that, okay, $1 trillion of that's just interest. That's all tied back to here. That is why they're saying they want to move our debt to the shorter end, because you reduce your interest payments. You're reducing that interest cost. Now add the fact that Warsh can continue driving down the Fed rate. And again, that Fed rate has an impact. You can drive down these yields further. So the more we can move our longer term debt down here, Warsh can reduce the Fed rate. That means we can reduce that interest expense right here. And if we can start nailing that number down, we can reduce that deficit. Then you talk about other things you can do to start reducing that deficit. Okay. Tariff revenue. They're saying it could hit as much as 500 to 600 billion next year. That's another thing that could start driving down the debts, that $2 trillion in debt. So, interest is like the easiest way to start driving that down. And that's exactly what they're doing. That's when you see these types of posts right here. Says the U.S. Treasury, you might have seen these on your timeline. U.S. Treasury bought back $2 billion of its own debt. Look at what they're doing here. So these are, if you look at the maturation, these are long-term bonds that we have out there. What they're doing is they're buying them back early and they're reissuing them. So they're buying back $2 billion from out here with these high yields, and they're reissuing them short-term with bills. Again, reducing that interest payment. Like, that's the whole plan here. The other thing is, by reducing the amount of bonds that are sitting out there, if there's less out there being issued and there's less out there being traded, that means that even if you hold demand the same on the long-term bonds, they'll start to exceed the amount of supply that should drive down rates on the longer term as well, because that's more supply and demand based. So by reducing the long-term debt, you don't even have to increase the buyers of the debt. Even if you hold them the same, again, that's less supply, less bonds going around for them to purchase. You can start to drive down rates. That's going to help business loans. That's going to help the real estate market. Okay, so that's what they're looking to do. And the big question is, like, who's going to be the buyers of the short-term debt? If you're moving everything to the short term, well, you've got banks. I've mentioned this before, the SLR change. They can start adopting that rule change today, but our banks are going to be able to buy up a lot more treasuries. The other thing, and crypto is very tied to this, is the stablecoin bill. This is why everyone wanted to pass this so badly, because stablecoin issuers buy up these short-term treasury bills to back all the dollars they put on chain. So the more stablecoins these stablecoin issuers are issuing, the more of this debt they're buying. So we can continue to shift that debt down to the short end. Okay, so you see how this is all coming together. And effectively, they can also, in doing this, reduce their balance sheet at the same time. Introducing these new buyers like our banks, these stablecoin issuers, by them buying up all these T-bills, we can allow treasuries to roll off the Fed balance sheet over time. But it sounds like they're not going to do that right away. That's very bullish, guys. It was a concern, like, if they were going to start letting that happen, start letting that roll off. Let me show you, actually. Let me pull up the Fed balance sheet to show you what I'm talking about here. Okay. So the Fed balance sheet, basically, this is when they buy up our own treasuries. Effectively, when they do that, they're pushing money into the market. They're buying, our long-term debt, pushing dollars out. So we saw this during COVID, and this is to stimulate the economy, right? We were holding $4 trillion in assets. So when it says assets, there's a combination of our treasuries and mortgage-backed securities. So we basically bought up a bunch of our own. That by buying those treasuries, we pushed dollars into the economy. Okay, we continued to do this up until about here. This is when the Fed decided, hey, inflation's out of control because we just pushed all this freaking liquidity into the markets. Now we got to go the opposite direction. Okay, this is when they started tightening up, quantitative tightening. This little blip here was the banking fiasco back in March, when we had Silicon Valley Bank fail, and we had to pump some liquidity into the market to save the banks. But other than that, we've been seeing this kind of drawdown, right? This QT. It just so happens, by the way, guys, this started in April of 2022. This is the end of the last bull run. You see that? So when we started QT, started pulling liquidity for the markets, well, lo and behold, that's when we started the downtrend in crypto in the last market cycle. Of course, later that year is when we saw FTX, which ended up actually being the bottom, believe it or not. But this is the moment, the inflection point that we started seeing that happen. Now, we got to zoom in to see what's going on here. More recently, you'll notice, you got to zoom in to see it. We ended QT, remember, right in December. That was that announcement that came out that we're ending QT. We're going to start buying treasury bills regularly. And you'll see we saw a big rise in our balance sheet. Again, that's pushing liquidity out. We saw some roll off. So we have, treasuries that are maturing that are coming off the balance sheet, ones that we bought that, when they mature, they roll off. Normally we can replace them. In this case, you can see we weren't replacing them. That's why our balance sheet was drawing down. But we are still steadily going up. The concern here was that when Warsh takes over in May, his whole goal is to reduce the balance sheet further. He's thrown out numbers like as low as like $4 trillion, whatever. But based on these comments from Besant, it sounds like it's going to be likely at least a year from the time he's put in May before they would start reducing this. So that means we could expect the balance sheet to continue growing for the foreseeable future. Markets like that. That's good for risk on assets. That's great for crypto, great for the stock market. And obviously this is a big deal because, as I mentioned before, QT is what ended the last bull run. Obviously, I think you could argue we're in a bear market. I think the Binance fiasco in October put us in this situation. But it is good to see the liquidity is moving the right direction, right? So that's the skinny, guys. I know that was kind of a deep dive in all of that, but I think it's important to really understand what the Fed's looking to do and why actually this plan with Warsh, I think, could end up working out. That's your macro lesson of the day. Let's talk about crypto now. Okay, guys, it's disgusting. There's really nothing. There's nothing actionable right now. You look at the chart. I mean, after we broke below, this was the key number right here. I mean, this is the number I'm looking at. If we break back above 72, we would effectively make a higher high that would put us out of a downtrend, technically speaking. So that would be a good sign that you might be worth, looking at along there. I think if we break above 74K, and the 74K to me is like the much more key level. Let me go to the daily. The 74K is much more important level. That's the one that we tapped back here, but this is the one that we broke out. If you look at the date here, this was right after the election. So it's the Trump pump. And this broke out of this resistance that had been there for the better part of a year. And this is also what we retested when the tariff announcement happened, this exact level. This is such a key level. This is why when we broke below that, I opened up shorts on Bitcoin, and obviously that played out very well. So for me, until we break above the 72,000 level to get into a higher high and break the downtrend, and then really the 74 level, I'm still assuming we're going lower, guys. That's kind of, you just have to see what the charts are showing us rather than trying to predict what's going to happen. Ethereum, same shit, man. Looks terrible. Absolutely terrible. This is a level, this 2140 level that we've tapped several times now. I opened up a short here. The last time we tapped it right at just below 2140 with a stop loss above in case we did break through to minimize any loss I would have on that, and opened up a short there. And I got the receipts, baby. So this is like yesterday. So 144% on that short. So again, there are ways, guys, to play this market, play the downside and the upside at these key levels, but you can't force it. Like right now, I'm just touching grass. There's nothing actionable at the moment. Everything's just chopping. If we tap back, I already have orders in to play this again if we get there. But to me, it's like, okay, this is the key level. This has been a key resistance level. I'll continue playing that. And if it breaks through, I got a stop loss that, I'll lose a little bit of money. But now with what I made off this one short, I could effectively do that 10 times, get stopped out, and still be breaking even. Okay, so this is where I'm trying to play both ends of the spectrum because, man, 2025, if you're long only, it was a really tough year. So I was like, I'm going to develop some new freaking skill sets to play both ends of it. Solana looks terrible. I mean, it's just, it is what it is. Like I want to be optimistic. I am optimistic longer term when things turn around. I just don't know when that's going to happen. And at the moment, the charts just don't look good. Okay, it's just what it is. Fundamentally, check this out though. Solana, 259 million weekly transactions, new all-time high. That's freaking awesome, guys. So we're seeing the usage. I mean, it's going to get to a point where, Solana it might have bottomed. I mean, we might have bottomed across the board. I don't know. But we've got to see the trend reversal before I'm willing to say that. And right now, I'm just trying to scalp trades, mostly short right now. But there's not really anything actionable at the moment. Okay, but let's talk about some bright spots, guys. Let's talk about DeepIn. I think that DeepIn is going to have a monster future here pretty soon, guys. Like I feel it in my bones, man. Like seriously though, I think we're in the right place, guys. And it's like super exciting. Like I have like now that I've kind of learned how to play the downside too. I just as far as DeepIn goes though, I'm so optimistic, man. And I think we had a lot of growing up in the last year. You look at like 2 years ago, some of them had a little bit of revenue. The revenue that we're seeing now, we see DeepIn projects that are now profitable. It's actually insane. Now I think it's just a matter of hashing out the tokenomics because the fundamentals and the revenue, it's great, but if and you can cheer them on, but before you invest in that shit, you better make sure the tokenomics are also going to be positively impacted by the revenue. And I've done a lot of researching which tokenomics models are going to be the best, which projects have the most upside. And I obviously have covered this quite a bit, guys, but look at that. Huge. Yes, huge. Aoki is out here. They have a couple of Fortune 500 companies in the US that they are doing paid pilots with. Look at this, man. This is their Gaussian rendering. So it's a bunch of videos combined into this. The way I see this playing out is like they're going to have robots in these stores that are constantly going around and videoing the store. So you don't have to have people do this. And you'll constantly have an updated rendering of what's going on in their store for store managers to remotely be able to determine what needs to be replaced where. They're also doing hotspot detection so they can show on shelves which areas are getting the most sales. I mean, the insights they're going to be able to drive from this info is insane, but a lot of it's going to come together with robotics. So super exciting. So Aoki sitting at like a $21 million market cap. It's been up as high as 80 million. So I think with the robotics narrative, Aoki has a tremendous amount of potential, guys. GeoNet, they're like, hey, we got to get some coverage in Spain. These guys are freaking crushing it. Their biggest markets, the US, you got Brazil. US and in Europe, obviously, 1 and 2. I think India's 3, Brazil's 4. Now it's about hitting some of these other regions. Aoki's going to make it easier to find the breakfast Hot Pockets, dude. I haven't had a Hot Pocket in so long. I gotta say the pepperoni ones are pretty fire, though. So GeoNet continuing to thrive. They're getting into drones. I'm going to be out at ETH Denver next week. They're out there. I talked to Mike. So it's going to be good to be able to see him catch up. If any of y'all are out there, definitely hit me up, guys. I would love to meet some people from the community. You have Rover out here, guys. 2026 is going to be a big year. Autonomous vehicles are popping up. They need more data. They need a lot more data. Rover has a very unique model. Okay, they're collecting LiDAR in conjunction with RTK. They have a data set that is rivaling that of Waymo based on customer feedback. So this one that's like $1 million market cap right now, the Rover token. They do have some dilution this year. Okay, so I have to be fully transparent about that. It could limit the upside to an extent, but I do like Rover a lot. They are tied directly to GeoNet. How about this announcement on Helium? So they were working on ways to improve visibility into the quality of service for their different the carriers they're working with. Traditionally, this has been a bit of a black box. Once the subscriber is off their network, they have little to no information on the quality of the connection, how long it lasted, how much data was consumed, etc. And it in turn led those carriers to act on the more conservative side. So in other words, they really only wanted to offload, because they're doing that 2-week trial now. They only wanted to offload in areas where they definitively knew that it was going to be advantageous to them. And really, it was a blind spot. They didn't have enough data to make educated decisions. It says that's why sometimes hosts would see traffic dips or long periods of time where no carrier offload occurred. It says carriers are becoming smarter at deciding where and how much traffic to offload based on economics. I mean, it makes sense. Especially as Helium and some of these other networks continue to grow, it becomes a much bigger line item for these carriers. So they're going to be a lot more selective to make sure it's going to really help their bottom line. I get that. So they also want to do it based on the performance of Wi-Fi and cellular in a given venue. Thankfully, at least one of our partners has now implemented upgraded mechanisms as the result of our QoS work, and we're starting to see the result of that change as of yesterday. He says, I would expect to break all-time highs over the weekend if we might see 40 to 50% less rejections. So in other words, these carriers now have better data. I think what he's saying is they're finding that they're getting a lot more value out of some of these locations that they're rejecting to err on the side of caution before. So those extra data points are allowing them to make better decisions. And you've seen this already. So they were at 39,000 that day. I don't have the most updated one. I think I saw one yesterday. It's up to like 45, 46,000. So all this is good. That means additional revenue. It means more locations for offload. If you're a deployer, it means you're much more likely to have more consistent offload in earnings. So good things all around, guys. Good things all around. This is also worth noting. Helium had its first ever profitable quarter on a protocol level. They're earning more than their burn rate. That's freaking nuts, man. So, you can say what you will about the short-term price action. I've made it very known that H&T, I think they have a lot of dilution they've got to make up from the early years. It is what it is, okay? So short-term, I'm not as bullish on the price action outside of it. If we have a major sentiment change in the markets, certainly that can drive the price up. But fundamentally, I think they need to exhaust some of those early emissions, but I do believe longer term, the future can be very, very bright for the token. Okay, so some of this depends on your time frame on what you're looking for. But the fact that they're profitable is a very good thing. That means you don't have to worry about them running out of runway and not making it. Okay, that gives them the time to go through that early dilution and really make this thing work on a longer term time frame, and that's a big deal. So I'll tell you what, if you are a longer term minded investor, these price points and DCAing down here is probably not a bad choice, frankly. But it depends on your risk tolerance, depends on your time frame, etc. But H&T, I think, is down like the lower 80 cents. That's lower than the last bear market, and the fundamentals are night and day stronger than they've ever been. I'll pull up a Kosh network. I'm interviewing their CEO on Thursday. Decentralized compute protocol. They are also very beaten down. I think this is worth noting. Can AKT, a Kosh network, this is a native token, be used to run agentic AI, Claude bots? Their CEO said rather smoothly, and they had put this notice out on their X page just a week and a half ago. Why spend $600 on a Mac Mini to run OpenClaw, previously called ClaudeBot, when you can run it for less than $1 on a Kosh? Guys, they're tapping into this. This is the next meta right now. It's taking place as we speak, by the way. These AI agents, you see this Claw everywhere, this ClaudeBot. This is where the money's flowing at the moment. You always have these rotations. It's taking place right now. I'm going to show you some of the plays I've been in that are doing quite well. But this is a big deal that Akash can tap into that. And I do believe you couple that with the fact that we have these, the energy dilemma on the grid that's going to be all over the news, and people are going to want to access compute capacity. There's going to be talk about accessing edge compute. In other words, computers that are already turned on that have, idle capacity that's not being utilized and renting that out. It's exactly what these protocols are doing. Akash is doing this. To me, those are something that you need to be taking a hard look at, because it has fundamentals and it has the narrative, the narrative. Agentic AI, compute shortages, they have millions in revenue. And the prices are down so much because of the market conditions. I think we're going to look back at these times, again, I don't know if we're going to, turn around in the next month, later this year. I don't know. But regardless, I think we're going to look at these prices and be like, man, we had so many opportunities in front of us. Hopefully people are taking advantage of it. Talk about Silencio. So they, I highlighted this the other day, but I think it's worth highlighting. They have this company that has just raised $500 million at $11 billion valuation. It's an AI agent that's using voice data, and these are the types of companies they're feeding. Okay, with their voice data for AI training. Not only understanding different languages, but now they're doing different emotions to get different inflections for these AI voice training models. And guys, the demand they're seeing is crazy. They're sending voice data to some of their customers, and they're hitting them back, and they're like, we need more. They're paying out stable coins. They also, I believe, if you have SLC token staked, you can earn additional money per hour by giving voice data up. But man, this is to me a no-brainer. It's like just over 1.1. I think it's like $1.2 million market cap. I was on a space earlier and I was talking about this. Like, if you want to get 100x in this space, it's not easy. And it's only going to get harder over time. You got to do it in times where the market is extremely beat down. We're currently on the longest stretch of extreme fear we've ever seen. And you have to find projects that are really under 3, better yet, under $2 million market caps. And you have to find those projects and the ones that are going to be successful. Because just mathematically, if you're already at a $20 million market cap, you need to go to a $2 billion market cap for 100x. We don't see that really in DeepIn. We see it. We used to see it in crypto. DeepIn specifically, though, $1 billion market caps have become a lot harder to come by, at least in this market cycle. Now, if you're going from a $2 million market cap, you need to get to a $200 million market cap to hit 100x. We've seen that several times in 2024. Okay, when the market was up. That's very doable in DeepIn. So that's, again, why you need to be looking for those types of opportunities right now, if that's what you're looking for, those types of returns. Silencio's one. Rover's one. Those are both down around $1 million market cap. 375 AI is now just over that threshold. If you look at 375 AI, let's pull it up. Everyone's like, you talk about it so much. Yeah, I'm going to talk about it till I'm blue in the freaking face. All right, so 3.578 million. I'm a little, I'll be honest, a little bit greedy right now. Like, if this continues to drop down, I'm going to buy more. It got down to under 2 million the other day at 0.008. In retrospect, I should have just backed up the freaking truck. That is insane. Like, to me, anyone that bought, by the way, congratulations to you if you bought at 0.008 the other day. I would say there's a decent chance you're holding on to 100x right now. Seriously. Like, you think I'm kidding. There's something going on right now with one of the exchanges. We've talked about this. I don't know what it is, man. It's this Bitmart. Look at the spread. There's a 5.42% spread. It has to be low liquidity on there, and that's why the price is so much is spread from everything else. It's where a lot of the volume's been taking place. So I don't know. I don't know what's going on there. We got to get liquidity improved. I was looking at Bitmart's website earlier. There are some liquidity pools you can add liquidity to yourself. That's not one of the pairs. Actually pinged their freaking customer support about it. So I'm like, what the hell is going on here? I don't know. It's got to get fixed. And unfortunately, there's very limited control. They control their own market making. They control their own liquidity pools. They're starting to test out some community liquidity pools, but that's not one that's available yet. So it's something they're looking into. I'll tell you that much. But in the meantime, I look at it as a short-term issue. And this, man, I'm going to continue adding, and I'm very excited for where that goes in the future. And I'm considering like, just like going even, I have a large bag, but I'm considering adding like a lot more. And that's that. All right, let's talk about a few of these agentic plays. I've covered these a couple times now. I'm going to continue covering these. This is where the meta is at the moment. So get this shit on your radar. Doesn't mean you have to buy it. They're risky. They're meme coins effectively, but not really. I mean, these actually, this one right here was built by this guy, this Austin guy, who has 445,000 followers. He's a Web2 builder. This thing is launching its own apps and making money and burning tokens with the revenue. Like, seriously, it is building. They have several apps now that are in the App Store. Paid apps. They're out here. Like, this is one of the big announcements. We had a major breakthrough. The past 4 apps we built are production ready and required a grand total of 1 human intervention. The app factory is working. So this thing is just churning out apps into the App Store that are generating revenue and effectively burning tokens with that revenue. And we're right now sitting at $12 million. I brought this up on the live stream on Sunday with Tyler. I made a purchase on that live stream. It was at a $6 million market cap. Actually, it's just under. So that is already up over 100%. This thing just wicked up to 14 million, guys. You got to get these things on your radar right now if you want to take advantage of the narrative that's taking place. Now, I don't know. Again, I don't like to buy into these charts. I waited until we saw a huge dip to add a bag. Back here, I think it was. Got to like 5.7. But, pullbacks on these types of things is something to be looking at. One that hasn't taken off that much yet is this one, Felix Craft. This guy, that made this one is he knows the other guy. Okay, so you want to make sure like the follower account's going up. Felix has not really had its big run yet. Oh shit, it just wicked up like crazy. It's at over 2 million, right? When I covered this on Sunday on the live stream, it was sitting at like 1.4. So this one just wicked up to 2.2 million. So I think this could be on the verge of breaking out potentially. I'm not adding more right now. I'll add if it continues, if we see another big drop. But again, these are a couple of metas right now that are going crazy. One other, oh my God, I bought this one at 400,000. It just literally wicked up to 1.35 million as we're here. Look at this. So this is up 100% in the last 15 minutes. That's crazy. Yeah, guys, get these things on your radar. This is this one here. This is a developer on the MetaMask wallet. Wish I grabbed a bigger bag. Shit. So these are all ones that I have on my radar that I have bags in all 3 of those. I had one in this. I sold it. Clonch. 10 million market cap. Yeah. That one could go off though. This is a launch pad for basically for agents to launch tokens on. But man, tell you what, guys, This is the meta right now, man. It's happening as we speak. This thing is going to 1.4 million now, literally up over 100% in the last 15 minutes. Made a bot that buys everything on Polymarket that's under 5 cents, and he banks the outliers that hit. Huh. Botha. Let's look at that guy. Botha. I don't know which one this is. I don't really see anything. Do you have a... maybe it's on Solana. All these that I've been... like right now, the major moves are happening on base with agentic AI. I know I've said this before, but it's like virtuals when a lot of those things pumped to like 200 million market caps, but they didn't actually do anything. These are actually doing something. These are driving their own revenue, guys. It's insane. And I think we're just getting started on this. He said, give me shitcoin trading vibes. Man, there's always a bull market somewhere, brother. And I'm always looking to take advantage of whatever the trend is at the time. That thing is still pumping. That's crazy, dude. I hope Felix goes off. I like that one. And this one's at 12. So, I don't know, guys. I'm not buying into the charts right now after those pumps, but if we see a big pullback, like let's say the jobs report, let's say that is really bad tomorrow, and we see a major sell-off in markets, you could see some of these drop significantly. Like I'll show you Felix, for example. This thing, when we had that big pullback, I think it was over the weekend, this thing dropped all the way back down to like 300,000 market cap the other day. I don't know where this was. This is February. No way. Oh, this is 1.3. It was back here. It was back here. Yeah. This is the pullback. So it got down to 300,000 market cap. You know, that would be an 8 or 9x if you had taken advantage of that pullback. So those are the ones I would be looking at, and I would be looking at them only really if we have a big pullback. I personally am not buying into these charts when things are going parabolic like this. I already bought when they were down. I'll be looking more so to take profits as we move up as opposed to moving in now. Qualify for Mario Cycle and Edge X. I don't know what that means. I mean, I've been trading on there. I don't know. I have a fair amount of trades I put in there. I don't know what the Mario is. I haven't really been looking at any of the other tabs other than just the futures. All right, guys. That's what I got for y'all. So covered a lot. I like having a well-rounded show. So we covered the macro and what's going on with Warsh. We talked about the bond market. We talked about Bitcoin and shorting Ethereum. We talked about DePIN and even some freaking agentic shitcoins. How about that? Oh yeah, they're gonna have a nice airdrop, I think, on there. I'm excited for that. I should qualify for it. I mean, I've been trading on there a lot. So, and I'm actually in a Brandon's Discord has a month-long competition going right now. They're gonna hand out a bunch of prizes for people that are trading on that platform. So that's exciting. So we're gonna try to book some more wins, baby. Hard part is just not forcing it. So I've been touching grass. I haven't entered any trades today. I had that one yesterday. I've only had one in the last 4 days, just because if you start forcing stuff when it's not at key levels, you're gonna lose your ass. I'm not trying to do that. So instead, I'll buy Felix the shitcoin. How about that? What is that at now? So it's over 2 million now. I like it. Let's go. Keep it going, baby. All right. With that said, guys, y'all have a wonderful evening. I'll be on tomorrow afternoon on the Daba Space. So we'll be talking. I don't know what we'll talk about. William hosts that through the Wolf Crypto account. And then Thursday, I've got the interview with Greg. I think I'm hopping on, William, with you and Matt on Friday morning. So we'll do a live stream there too. And I'm sure I'll knock out another live stream either tomorrow or Thursday as well. So we'll update you on everything going on. Peace.